CYC.X. That's just a symbol. But it's Morgan Stanley Cyclical. And it's a weekly chart. Cyclical names. You've got Citigroup in here, Caterpillar. You got the Rail, CSX. You got Deere in here. You got the Dow Chemical in here. You got the FedEx in here. You got FCX in here. You got the Honeywells in here. But these cyclicals is where a lot of fund managers, you got X Steel in here. That one there, someday it'll be on sale. So basically, it's a good gauge of the economy. We need to know exactly how these names are going to work out in these bellwethers. The Caterpillar, the Deere, we have an all-time alerts on these. The FedEx as well. One of the things that I will show here is mutual fund managers and the broader Wall Street money managers like to buy cyclicals at certain time. We had the calendar 2012 reversal to support, which is here. And I will tell you, history repeats itself. We got the fiscal cliff in play now. When these were on sale here, this is where the great rally was in the cyclicals. And then we came right back up with a lower weekly high. We haven't totally broke down in this one yet, MMTs, but I can tell you that if we're going to break below the 10-week simple moving average in the cyclicals now, and this is where a lot of fund managers like to buy and hang out. And there are dividend yielders in here that pay good dividends in some of these names in the cyclicals. And that's another reason why a lot of these get support now. And we will pick out the individual ones. I will just caution people that we have a major resistance, a close below the 10-week moving average, but there's the 100-week. And ultimately, if this breaks down in the cyclicals now, that means that Caterpillar is a great gauge of worldwide economies. So is the Rail, so is the Deere, so is the DuPonts, and so is the Dow Chemicals now. You got Ford in here as an automaker. You got the Honeywell in here now. And you got your FedEx in here. And these are individual names that are the combination of stocks that equal this whole weekly index. It's very, very important to understand that we have a major resistance level. Now, as far as bulls go or longer term bull rally go, they love to see where the cyclicals now, those stocks, the cyclicals now, are leading rallies now. Because at the bellwethers that are in the S&P 100 that I had showed, some of them are in this index. But I can tell you right now, these need to hold up. If we start breaking support down, the broader markets go with it. That is the overhead risk for a lot of people. Cyclicals cannot break down in bull rallies. We got major support levels right here. This is going to be the 20-week and the 50-week if we snap through here. But if we do break down in the index, you got to remember that these broader leadership names are going to be the ones that break to lower lows for this index to break lower. Right now, it's been one of the few indexes out here in the sector indices that have held above the 10-week moving average. But however, and it's pointing up, and that's a great bull case in the cyclical, but when we do snap it, the broader market goes with it.